right, what's going on, tycoons? Very excited for today's video to bring you an update on Reef. Okay, now we're going to go over what happened on the chart since the last time we charted it up, and then I'm going to chart out the major levels for you guys to look at now. Okay, so previously we were looking at really just these three levels right here, the 38.2, the 50%, and the 61.8% level. We needed to hold these levels as support. And if not, we were going to, basically be in a downtrend and the upward momentum was going to be lost. Shortly after that video, the FTX collapse happened, right? And things look very good because Reef was holding the level, and then we got a sharp bounce, and then the news about FTX comes out, and it pretty much crashes the whole market. So what we have to do is we have to get rid of this now. Now, if you're unfamiliar, okay, this is the fib tool. All right. So that's one of the most important tools that you can use, especially as a beginner. It's going to be this tool right over here, and it's going to help you get some valid support and resistance levels that maybe as a beginner, you're not familiar with how to draw support or how to find resistance. These are going to do it using a math equation. And it's a very important thing to do because, believe it or not, about 70% of trading in the cryptocurrency market, even the stock market, is done by algorithms, right? That are programmed to buy and sell when certain conditions are met. So by using this math formula, you're going to give yourself an edge by using some mathematically generated support and resistance levels that, algorithms are paying attention to as well. Now, there's many other factors, but, using one of the things that they're using is going to help you out a lot. The other thing we're going to look at is the relative strength index down here, and you can actually spot both bullish and bearish divergences. Okay, if you're unfamiliar with those, we'll cover those real quick. It's very simple and an easy terms to start understanding that help indicate possible entry or exit signals. All I need you guys to do is smash the like button and subscribe to the channel, okay? Especially if you're new to the channel or if you've been watching a few videos, subscribe. It'll help the channel out a lot. But let's go ahead and just break down into the content, right? So over here, we're going to go over a bullish divergence. Now, this is actually a slight bullish divergence, and it's not a very strong one, right? But if you look, we have a downtrend here, right? So we have a low, we have a lower low, we have a lower low. On our relative strength index right here, we're flat, okay? So as the token is going down, the relative strength index, obviously, it's going to be measuring the relative strength of a token at its given price. So typically, the strength should drop with the token, right? We see this drop right here, and we see the drop in the relative strength index. When a divergence occurs is when the relative strength index is doing something different. So here it's doing something different and remaining flat while this is going down. It's an indicator you may see some bullish activity, and we get a very nice pop shortly afterwards, right? We see a very big candlestick, we see a pullback, and then a continuation of that trend, and that ended up leading to about a 126% rally. Now, how do you figure out the major, resistance levels when you're on an uptrend that you possibly need to sell at? Or what are some of the signals saying that, hey, this thing may be having a sharp pullback? Well, this is where the fibs come in, right? So we're using the fib tool and we're looking at these three levels, the 61.8, the 50, and the 38.2. These are the three most common retracement levels. Nothing is going to move in a straight line up or down. It's going to retrace and continue the trend, right? So in this case, we have our swing high up here connected to our swing low down here. Look how sharp this move was to the downside, right? So that's clearly a downtrend. Then what do? We end up retracing, right? So immediately we retrace up here to the 38.2, get rejected, and head back lower, right? Then we consolidate in this period, right? And there's three stages to a reversal. There's your downtrend, there's your consolidation period, and then there's the reversal itself. But sometimes, you don't get the reversal, you get stopped short. And what happens is you get a downtrend. And if you look, we come here again, get rejected at the 38.2, head lower. We come up and we get rejected at our 50% level ultimately before starting completing the downtrend and heading down to new lows, right? So that's why we use these levels because they're very well respected, and it's a good thing to determine if you're in a reversal, right? A reversal would have been we come through here, we pull back, and then we break through those levels, right? So if you break through the retracement levels, it's no longer a retracement and it's a possible reversal, right? But if you get rejected at your retracement levels, then what you have is a downtrend continuation. So, you can use that. And then on top of that, you can combine. So we see here we're at our 50%. Let's say we got in off of this bullish divergence. We're riding that momentum. Okay. And we're knowing that, all right, well, we're at a major resistance level. And then we actually have a bearish chart pattern forming, right? So that's going to be indicated by these two trend lines right here. This is what's known as a rising wedge, and it's a bearish pattern. Okay. You're going to see the price action zigzag in between here. But once you break that down trend line, going to get a sharp move to the downside. All right. Not only that, we had bearish divergence. So, we went over bullish divergence. A bearish divergence is when you have a high here, right? And then you see we have another high here. So the relative strength of the token should be going up. But in this case, we see the uptrend is on the token price and there's a downtrend on the relative strength index. We have a high here and a lower high. So that's a bearish divergence. Combine that with the fact that we're at our 50% retracement level, a major resistance area. And then you look at the rising wedge pattern and we end up breaking it, okay, and coming down. It's three things that you could have combined together to really give yourself an edge to either maybe go short or to protect your trade. In most cases, people aren't interested in going short. They just want to figure out when to, sell before a possible crash or a possible pullback, right? And so we looked at three things: the 50% chart pattern, okay, and a bearish divergence. Trading is like going to war. It's like going to battle. Okay. And the battleground that is trading, you need to be properly equipped with the most weapons and the best weapons at your disposal. And these are three that you can use to really help give yourself an edge. All right. And further increase your chances of success. No strategy is going to be 100% guaranteed, but once you see multiple things lining up, right, you see two, three, four strategies combining together, indicating either a bullish or a bearish move possibly, then you can have more confidence in your trades, and those are what you call high probability setups. Okay, those are things you want to look for. So now that we've gone over the three strategies that we're using, the first thing that we're seeing on our chart on the most recent price action is going to be a much larger trend pattern, okay? And it's really going to be this descending triangle, right? So it's not a falling wedge or a rising wedge. We have this major trend line right here going to the downside, and we have this just base support level that we retested here recently. So we're really just seeing price descend inside of this triangle, and we're going to look for a breakout to the upside or possibly a breakdown to the downside. Okay. So the major support level that we're actually looking at is going to be right here at 0.0027, right? That's the main level you want to watch if you are scared. Right now we are holding this level, but as soon as we break that, there's a possibility we really could head lower. That's our main level to watch. But as far as retracement levels, which I do think that we're due for a healthy retracement here soon, it's going to be these three levels, right? So we're going to connect our swing high up here down to this swing low, this support level, okay? And it's going to give us our 38.2, our 50%, and our 61.8% retracement levels. Earlier in the video, we went over the three stages of a reversal, being a downtrend, right? And then a consolidation period, and then your reversal. Now, to get the full reversal, we have to come up and break through these levels, okay? Um, so, even to, further create a downtrend, it needs to retrace a little bit, right? And we're not really seeing any retracement. So we're just seeing this consolidation period. It definitely could break down lower, but we have the strong support level here right at 0.0027. Um, and what we're going to look for is we're going to look to see if it can rally back up to 0.0044, 0.0049, and 0.0054. Those again are the three main retracement levels. And if we come up to these levels, okay, there's a high likelihood that we're going to get rejected. But if we don't get rejected and we break through, that's when we can, possibly have our reversal. Okay. Um, so those are the three levels. Again, not seeing any smaller chart patterns right here. I mean, some people could say that this is a bear flag, right? And you get the breakdown, and this is really the breakout level. Again, that major support level. That's definitely a possibility. But longer term, we do have this descending triangle that we've been tracking here for a while. And it's just going to be a matter of time before it breaks. Now, either to the upside again, we could break out to the upside, or we could break down to the downside. So keep close attention. Not seeing any bullish divergence or any bearish divergence at the moment, but now that you've learned those tools, monitor the relative strength index in the candlesticks and what they're looking like, And once you see a divergence, that's going to help be a possible indicator of some of the future activity. Again, no strategy is 100%, but hopefully you learned something new in this video. And if you did, smash the like button, subscribe to the channel. Don't forget, I do those viewer requests every week. So if you want to see your token, your crypto in the next video, all you have to do is comment down below. And if you made it this far, I think you will enjoy one of these next two videos.